Ahoy there, traders, and welcome one, welcome all. As usual, thank you for taking just a moment out of your day to spend with little old me. We're going to be talking about a concept. This will take just a moment or two to go through. But I found myself saying this several times yesterday to the group coaching session and some individuals throughout the week. But the whole idea around what drives me in trading long term. So short term, anyone can push the buttons, get lucky, and put trades on. But long term, I've been doing this for over 25 years now. And it's that long-term success that is driving us. So that's kind of like the theme, always be in business tomorrow. So whatever happens today or yesterday or last week, check it. Put it to one side, but set yourself up for success to be in business on. So that's the kind of the theme that we're talking through today. Nonetheless, we've got a few regular faces, a few old faces, a few new faces. Hello, Alan, Craig, Daniel, Emily. Hello, Glenn, as always, Ian, Mark, Michael, several Michaels. Vito, of course, Vito, always at the bottom of the list. You always get a mention. You always sneak in there. But nonetheless, we've got a nice tight group of regulars. Thank you very much for your attendance, and let's jump straight in. There we go. So the way these sessions roll is normally spend about 20 to 30 minutes, and up to about 60 minutes we'll take a look at the markets, we'll review some portfolios, and the main theme of what we're talking about has always been business tomorrow. So there's a little bit of a theme with what we're doing every week. For those of you who today's your first day, first week joining one of these sessions, I'm not a Wall Street guru. I'm just a regular guy. I figured it out. I did it the hard way through trial and error. I wouldn't recommend that to anyone. You can learn very fast doing it the trial and error way, but most people don't. Again, looking back over, although I've been trading for over 25 years, for about 20 of those, I have been helping traders like you and coaching and mentoring along the way. And most people don't figure it out on their own. Again, it's just one of those things. Usually someone needs help. Anyway, I'm just a regular guy. I like to relax. I like to chill out. I tend to consider myself a lifestyle entrepreneur in that I don't spend all day doing this. I want to be done and dusted as quickly as possible. Lots of reasons for that. I've got Crohn's disease. I only mention it because it's relevant. I don't want boo-hoo, poor you. It's just the life I have to live. I go through constant cycles of good health, bad health. In my case, I've got permanent mild symptoms. I also was recently very ill through January. And the process that I use is, I often refer to it as a production line, and it's not for your benefit, it's for mine. Selfishly, I want to be able to place the trades that make the most sense to me in the minimal amount of time. And, when I'm in a good health cycle, then it means I can go and do stuff. I can spend time at the coffee shop, which is what I've done this morning. Go and have a coffee, or it was takeout, but you know what I mean. But have a coffee, enjoy cake. I tend to go for long walks at the moment. Now the weather's improving. I enjoy a relaxed pace of life. And it's for that reason that I have what I refer to as a production line. I want to know step 1, step 2, step 3, check, check, check. There's the trade. It's minimal time. It took a long time to get there, but that is what I want for me, for my trading, because I don't want to be flicking through chart after chart after chart, wondering, is this the one? Because that's stressful. You spend an hour looking at one chart and you miss 3 others. So let's just zoom in on the charts that make the most sense. Anyway, the official backstory is I've been doing this for a long time. It's all on there. We've covered this many times, many weeks. It's not the first time I'm doing this. I've been in the trenches on the hard right edge of the chart, calling my trades out in real time since 2004. Win, lose, or draw. We're going to look at the lose side of the ledger because there's more lessons to learn from the losses than the winners. So that's the focus of today's session. We're going to focus on the winners, focus on the losses, because that means that we can appreciate the winners. A little bit counterintuitive, but nonetheless, that's just the way it works out. So the theme of this week, we're going to start with the content part, and then we'll finish on the charts. This won't take too long. It's just a concept. And the concept is always be in business tomorrow. Now, the question I want to pose to you, the question I'd like each and every one of you to think about is, what does it take to win at trading long term? And I don't mean 6 months. I don't mean 12 months. I mean, in 25 years, will you be consistently successful and on average turning a profit, just like any other business? Or are you going to thrash around for 1 or 2 or 3 years? Maybe you're losing money, maybe you're making money, but on par, you're either break even or negative, because that's certainly what happens, not just in trading, but in most startup businesses. Most startups have that experience. In under 3 years, what's the stat? It varies from corner to corner around the world and industry to industry, but what is it? 80, 90% of businesses fail in the first 3 years. Trading's no difference. If you go and look at all the brokerage websites, especially in the UK, by law, in the UK, they have to state how big a percentage of their clients lose money. You can go to IG Index, for example, you can go to CMC Markets. On their homepage, they have to state 87% of our customers lose money. Just think about that for a moment. So what does it truly take to be successful at any business? But because obviously we're talking about the trading business. And the first step of that is a trading plan. Shock horror, but you need a plan. You need to know what you're going to do, when you're going to do it, why you're going to do it. Every week I talk about the 4 elements that go into a trading plan. Most people only have 2 of them, or most people only have 1 of them, an entry pattern, but it's more than an entry pattern. And you can, in the short term, you can get lucky with an entry pattern, whatever that pattern is for you. You can get lucky playing every setup in the short term, because with every strategy, there are cycles of winning phases and losing phases. And it's the losing phases that trip the novice trader up. And all I'm calling a novice trader is someone who's not quite figured out all the components, the 4 elements to a successful trading business. But in the short term, you can get lucky, and that's okay. But when you've got, I've got to admit, let me regale you. I got lucky on my first ever trade. It was a company called Waterfall way back in the 90s. I bought it for 54 pence. It was a penny stock. And then for about a month, I had palpitations as it went from 54 pence down to 46, 47 pence, whatever it was. It doesn't sound like much, but when you've got a few thousand, you pretty much got your life savings as an 18-year-old kid, essentially. Got your life savings in that one position. And for that next month, it was a heart attack sport. It was palpitations. It was anxiety. I didn't know what was going on. And then it turned around. And then the following month, it went from 46, 47 pence. It went past break-even points. Then it went to 60, 63, 64, 65 pence. And I'm thinking, yes, it's working. This is great. And then I had the high-grade problem of what to do. Like, do I take it now? Do I hold on? What do I do? I didn't have a plan, and I got lucky. I really got lucky. Looking back on it, I got lucky. But that and I knew it is the important part. I knew it. I knew I'd got lucky because for 8 months I had constant low-level anxiety. I don't remember sleeping at that time. And I'm sure you can all relate to that experience at some point in your life. You've had that, whether it's a day trade, a swing trade. In my case, I had this multi-month swing trade. It was only a multi-month swing trade because I didn't know what to do with it. I didn't have a plan. I didn't know what I was doing, when I was doing, why I was doing it. So you can get lucky playing the hands that you're dealt with. But what we want to do is we want to have a strategy. And I'm using poker analogy and poker metaphors because most people, even if you don't play it, can kind of get, yeah, you want to play the high cards. You want to play the king. You want to play the king ace. You want to play you can play random decks. And there are strategies that revolve bluffing, but not everyone can do that discretionary element in the game. But when you start out, you want to play the best hands that's possible. And if you're not dealt the pair, the kings, the face cards, if you're not dealt them immediately, you should fold. And that is the principle. You should not be taking second class, second rate, maybe trades is how I refer to them. And you want to start using your brain. It sounds counterintuitive, but you really want to give some thought to the four elements: a mechanical scan, a visual confirmation, then it's the entry pattern, and then it's trade management. They're the four elements. We're going to go through those later, but we want to be thinking with our brain and not be like a zombie, looking for brains. We want to have our best foot forward. So give it some thoughts with what you're doing. You do want to plan what you're going to do. And again, to use the metaphor that I like, is the production line. You're going to get the first step, the mechanical scan. You're looking for things that make sense. Has this met the footprint? Because if it's not going to go to the next stage of the production line. It's quality control. It's very strategic with what we do. We want to be we want to have a consistent application. When the next move is logical and consistent, we can play the next move. And a lot of what we do is thinking. But when you've got a structure, a thinking process, a plan, a strategy, it's easy to make the next decision. What should I do next? You should never be asking yourself, this is what I'm going to do next. It's a statement and never a question, because that's what's outlined in your trading plan. Now, if you have not necessarily a failure, but if you have a negative experience, and the way that I developed as a trader, which I wouldn't recommend to anyone, like I had that experience. It's like, okay, I've experienced something that I didn't like. I regaled a story earlier in the week of when I was trading IBEX futures, and this is 2002, 2003, somewhere like that. The IBEX futures is the Spanish index, like the FTSE or the Dow, for example. And I remember vividly trading intraday charts. To this day, it was my first experience, and it was a horrible experience. I placed my trade in the way that I would normally place it at the time. And then the uncertainty crept in, because I didn't have a robust strategy as I have today. That when something weird was happening, because the trade didn't perform immediately, it put a question mark against my decisions. And I went from quite literally having an entry set up that met my criteria. There's my entry, there's my stop loss, there's my targets. I knew all of that going into the trade, but then it went red bar, green bar, red bar, green bar. And then for the next hour, I was going long, short, green bar, red bar, green bar, red bar, long, short. And that's what I did for an hour. And I literally churned my account. And then when I realized what I was doing, I was able to snap out of it. And it was just such a horrible experience. And again, I'm sure that you've either heard a story or you've experienced it yourself. But if I just stuck to the plan, that's the problem. If I just stuck to the plan, there's my entry, there's my stop loss, there's my targets. If I'd done nothing other than, and this is where the rule that I like came into play, stop loss or targets. One of those things, until one of those things happens, don't touch a damn thing. It's not hit stop loss, leave it alone. It's not hit target, leave it alone. Until one of those two things happens, everything between that is noise. So what I ended up doing was trading the noise. Long, short, red, green, red, green. It was a horrible experience. But what that allowed me to do is, because I experienced a negative thing, I don't want to experience that again. I made it a rule. Unless my target is reached, unless my stop loss is reached, I am not touching a thing. Now, what that also allowed me to do was to free my time, because now, well, if it doesn't hit stop loss, it doesn't hit targets, I don't really need to be in front of the computer anymore. I can put my trade on and walk away, because it's not necessary for me to be there. So suddenly I found this unshackling from the computer, from the charts. And that was kind of like the genesis of where I'm at today is, okay, I want to spend minimal time at the computer. Suddenly I found freedom without the sacrifice of being, you think I'm missing out, that FOMO, that thing that we always experience. So let's look at some trades. Let's try and put this into context. This is the principle, always be in business tomorrow, always be in business. So this is a trade from earlier this week. This is Alibaba. It was on the 9th of March. If you want to take a look at it, depends on when you watch this. The recording will be available on YouTube later today. But this is a traded place. You can see the broker statement there, full transparency. I lost money on this. It's rebased to represent a risk of $250. So you can multiply up or divide down to your personal situation. But you can see it's a losing trade. Now, let me rephrase this. It's not a losing trade. It's not a losing trade. I lost money on it, but I want to take this trade every time because this trade meets my criteria. It got all the way to the end of the production line. I did everything that I said I was going to do before, during, and after the trade. But on this occasion, it produced a monetary loss. Now, I'm being very specific with trying to distinguish a losing trade and a monetary loss because it's the same experience, but what we're doing from a mindset point of view, again, remember, we want to use our brains. Now, the concept skirting around is reinforcements, positive reinforcements and negative reinforcements. I want to positively reinforce that this was a good setup. And I don't want to acknowledge the losing trade. Because if I say that this is a losing trade, it's going to prevent me from placing the same trade tomorrow. Does that, let me just pause there for a moment, everyone. Because we've got a growing number of, but does that concept ring true? Let me put a little yes in the chat box. We get it. It's important. This is the side of trading that's not talked about at length by many people. This is the difference that's going to take you from being short-term lucky to long-term successful. And it's mindset. Everything else is a learned skill. You can learn the skill of chart reading. You can learn the skill of trading. You can learn Phil's production line process. You can pick it up in an afternoon. You know, if you really put your mind to it, you can pick it up. But what separates the people who are at the one side of the spectrum that are, oh, this is bullshit, it's a scam, it doesn't work. What separates those people from all of you, because you now know the difference, is mindsets. It's the ability to place the trade tomorrow. So if I call this a losing trade, all I'm doing is negatively reinforcing the decisions that I made prior to placing the trade and during the trade and after the trade to close it. I'm just reinforcing that they were bad choices. And that would prevent me from placing the same trade tomorrow, even though it meets the criteria. You're going to have the emotional experience that I described earlier. You're going to have the anxiety, the sweaty palms, the sleepless nights, the did I do the right thing? The trade went on. Oh, red bar, green bar, red bar. You're going to have those experiences because all you're doing is negatively reinforcing. So the first thing I'd like you to take away from this is a monetary loss. It's not a losing trade. If you did everything that you said you were going to do before, during, and after the trade, how can that be a loss? It was an acceptable monetary loss. Again, I'm being a little bit pedantic with the phrasing, but what I don't want to do is to reinforce the good decisions that led to a monetary loss, because I want to do those good decisions again. Now, let's take a look at after the fact. Let's take a look at after the fact. So if I'd held on to the trade, so the yellow box there, the little tiny one on the charts, not the big loss. This is the same trade, but at the end of the day. If I had held on and closed my eyes and broke my rules and didn't have an exit strategy and diamond hands this baby all the way, I would have seen a small profit by the end of the day. Let me say that again, a small profit. Not the one I was wanting, but a small profit. So here's what would have happened. And I guarantee we've all done it because I know I've done it. And I know that that's what would have happened. I could have held on to the trade, not stopped myself out, and then sat there hawk-eyed watching every uptick, downtick, looking at the P&L. It's making money, it's losing money. Oh, should I take profit? Oh, should I take the loss? Oh, should have got out? Or the worst thing is you hold on and you take a bigger loss and then you sell right at the bottom of that move. And then you sit there for the rest of the day and watch it because you exit at the bottom. There's two possibilities here. You hold on and it's anxiety levels through the roof, new high scores on the blood pressure all day, or you get out at a worse point than what you said. You don't take the loss that you said was acceptable and take 2 or 3 or 4 times the loss because you're holding on. And then enough's enough. You hit the eject button. And then that's the exact point that it turns around. It's a horrible experience. Just take the acceptable loss that you said before the trade. If it does this, it goes to my stop loss level, I will stop the loss. The clue's in the name. That's the acceptable point where, you know what, again, it's not wrong. It's just, maybe I've mistimed the trade. You can always re-enter. I don't want to because I don't want to sit through the trade all day. So let's take a look. This is another loss. What can we learn from this one? This is an acceptable loss. This got me in. It got me in the trade. It stopped me out. So let me just, over at top right here. So it got me in the trade. This is from yesterday. Got me in the trade. And then it pretty much turned around very quickly. And then flat lines for the next hour. So either getting stopped out or you're holding on and then it's going nowhere. And because it's going nowhere, it's that red bar. Can you see it? Red bar, green bar, red bar, green bar. If you're trying to get a re-entry there, or you're trying to think, is it going up? Is it going down? Is it going up? Is it going down? That was the experience I had. I tried to trade that one time and I never want to do that again. Never. I don't even want to sit through it. Up, down, up, down. A horrible experience. But here's the worst part. The worst part is if I'd held on. And this is the game, that the damaging mindset that a lot of novice traders, and I know you're not going to do this, you're now aware of this. But if I'd held on yesterday, it would have done what I wanted. I was looking for about 60 cents to $1 out of this trade, and it did $1. The high of the day was exactly $1 from the entry. So if I had held on, it could have worked out, but I didn't know that at the time. And this, for the one time that it happens, when you have a trade and you've seen it, and you've played the game, if I'd held on, if I'd done this, if I'd closed my hands, if I just, all those if only after the fact with the benefit of hindsight, because you're only looking at the trade with the benefit of hindsight. This doesn't happen often, where the trade, if I'd mismanaged, if I'd re-entered, if I'd closed my eyes and hoped for the best, it would have worked out okay. For the one time it happens, there's 10 others that are like this. And here's several examples where that decision, the if only, and again, this hopefully should reinforce why we have a rule. I want to know when I'm getting in, when I'm getting out if it's not working, when I'm getting out if it is working. There's only 3 outcomes. It goes up, down, or sideways. If it's going up and moving favorably, it's going to go to target. I know my exits before I enter. If it's working profitably, I'm going to close the trade for a profit at a predetermined point. If it goes down like this one, we'll focus on the losing trades, the monetary losses. We've rephrased the way that we think about it. It's not a losing trade because I want to place this again tomorrow. So a monetary loss is what was appreciated. But if I'd closed my eyes and hoped on, hold, and held for the best, this would have been the worst experience. It went nowhere for the rest of the day. And this is what normally happens. The majority of the move, again, I'm focused on day trades at the moment. It's the same thing with swing trades. We have the same timeout rule for swing trades. So if we're holding and we're doing overnight trades and the trade's not working within about 20 days, I want to time the trade out. So the same thing here. If I'd held on and didn't have the management rules that I do, this is going to put your blood pressure up. It's going to give you sweaty palms. If you're doing this around the day job, you're not doing the day job. You're looking at your P&L. You're stressing over every anxious uptick and downtick, red bar, green bar, bias. It's horrible. It went nowhere. I was out at the beginning of the day and I walked away. An acceptable loss now is better than a high blood pressure score later. DKNG, now this is a positive trade from a monetary point of view, but it's break even. It's a break even trade. It's a few pennies. It's not a great profit, but the same thing here. So here's the thing. So this is on the lower time frames, 15-minute chart, again, focusing on a day trade. I'm looking for a swing trade on this as well. Any of our insiders will know that that's what we do. We try and get a day trade into a potential swing trade so we can really maximize the gains. If we've got the chance to do that, we will do that. So this is one of those, like, it's not going anywhere straight away. It's not, I'm looking for momentum. I'm looking for a quick, I want to hit the ground running. So this is not hitting the ground running. At about 10 minutes before the close, it's not going anywhere. It's not doing anything. Sure, it's in profits, but it's not giving me the confidence to go, yes, this is probably on its way to swinging higher. So if I had held on overnight thinking, yes, I've got a profitable trade, it's going to go to the moon. Yeah, diamond hands. If I'd held on, you can see the yellow box there in the center of the chart. That's where the trade was taken. We've moved on to a 15-minute chart. And briefly, you're right. But if you're not getting the directional movement fast on a momentum trade, then why are you holding? It didn't meet the criteria. This is why we have management rules. I'm not hoping and holding and praying and wishing that it's going to work out, because we have rules. And what I'm doing is I'm managing my ability to place a different trade, a new trade tomorrow. So that's what we're doing here. The rules are to protect you from the times where, you know what, I've got the setup. It stopped me out. Here's DKNG in at the open, no follow through. Why are you holding and hoping? So if I had held on to this trade and hoped that it worked out, then it went a million miles in the opposite direction. It's a $50 stock and it dropped $10 in the opposite direction. $50 stock, $10 in the opposite direction. Why are you holding and hoping? This is what management rules are for. This is what happens when you start to think about your trades. One last one, Square. SQ, again, at the open, trade went on. It just tickled me in, quite literally to the penny. It was very frustrating on the time. And any of our insiders who are here today, they'll remember this one. It just got me in, nipped me in, and then turned around. But as it turned around, I'm out. I'm not holding it because it met the exit rule, the exit criteria for, hey, if this is showing a monetary loss, this is the pain point. This is where it stops the loss. The clue's in the name. That's why we have these rules. Because if I'd held on and hoped and prayed, I've actually got the wrong chart on there, but it's the same situation. If I'd held and hoped that it worked out, it would have sold off. And we don't want to do that. We don't want to have the emotional rage, the silent roars. We don't want to end up after every trade punching a hole through the wall. We don't want to be in tears, because I've done all of these things. I've screamed. I've punched walls. I've been crying. I remember one time, very vividly, and I'll try and be quick with this last story. Like, I've been very fortunate to have not blown my account up, and which is not the normal. Most people do it once in their trading career. But what I have done is I've blown 50% of my account twice. The last time was in 2007. And this is what it was what kind of caused or proved the point of always be in business tomorrow. Manage your ability to place the trade, both practically, physically, emotionally. Because what happened was and it was user error. I'd moved brokers. Instead of placing a good till cancelled order, I placed an end of day order. So my target and stop loss were cancelled at the end of the day. And then I went away for 4 days. The trade, in a frustrating plot twist, the trade hit targets and then ricocheted, and just like we saw, a million miles in the other direction. And there was no trade management in place. I thought there was, but because of the order type, it was cancelled at the end of the day. And I thought I'd had a nice profitable trade while I was away, sunning it up with a long weekend with the wife. And this is what I did when it came back. I did the silent scream. I raged and roared, and then I cried. I crawled back into bed and pulled the duvet over my head because I didn't know what to do. But when, in this case, it was user error. So all I'm trying to illustrate is like I've been there, like I've experienced it. I don't want to ever experience these things again. I'm looking to manage my peace of mind. And this is what I'm trying to get across. This is why we have rules. This is why we have a strategy. I want to trade small position size. I want to have a systematic approach to find, filter, and sort stocks because I always want to be in business tomorrow. Now, although I had that rage experience and, oh my God, what's going on? Why is there a negative balance in my account? I've had that. And again, last time was 2007. It's been a long time since I've had that experience. But it's because of rules. It's because of strategy. It's because I'm not worried about the single trade today or yesterday. And we've seen some of the monetary losses in the last several days. I've had monetary losses. And you know what? I'm okay with them because I want to place the same trade tomorrow because I know that when I do, I'm going to have that consistent run. I can learn from my the trades that don't work out, and I can get through them because I know success is on the other line. I know because I've got a proven production line process that allows me to find, filter, and sort stocks. I refer to it as a production line, and it's for all the things that I've mentioned. It's not so that I have a winning trade and that I make some money. Money is a byproduct of process. And it's the same with any business, whether it's the trading business, whether it's e-commerce, whether it's bricks and mortar business, whatever the business is, it needs to have a systematic approach. All successful businesses have a well-defined, robust business plan, and trading is no different. And here's mine. I want 4 steps to it. I want a mechanical reason to be looking at my opportunity. I do not want to be flicking through chart after chart after chart. We've been through mechanical scans last week and the week before, and pretty much every week we go and look at different types of mechanical scans. Here's 5 stocks that I need to look at today, and I can ignore the other 27,000 stocks on the US markets. A mechanical scan. Here's 5 things that make the most sense based on the things that you're looking for today. And we've looked at that on the day trade scans, and we've looked at that last week when we went shopping for swing trades. So you can go and review that. You know, it's a simple production line process. In each of this has this, and this happened. Great. Then I'm going to visually inspect. So step 1, I'm not looking at charts. Step 2, visual confirmation. Is it doing what I'm expecting to see from the mechanical scan? Oh yeah, it's going up. Okay, it's retracing in an uptrend. So, visual confirmation. Is it doing what you're expecting to see? Great. Then look for your entry. I've got 9 entry patterns that I like to look for, depending on the scenario and the situation. They're all variations of what most people would call a pullback, but the only difference for me is the context of where they are in the chart. But your entry pattern, it's a very systematic, like this, and this has happened. Great, put the trade on. And then when the trade's on, it's management. And this is what we've focused on today, is the always be in business tomorrow. Is the trade management. I'm going to time the trade out if it's taken too long. I'm going to target out if it does exactly what I want it to do. And the E is what we focused on, is exit out if it's not going the right way. Don't hope and hold that it's going to work out for you just because you want it to work out. Like if it's not working, press the eject button, come back tomorrow. It's fine. All I'm looking for is one good trade every day. That's it. I'm not sitting here all day, every day. I've got a very strict, rigid rule set, the production line that we've just been through, to say, okay, out of those 10 stocks that you're looking at right now today, only one of them is meeting the extra criteria. Again, the active market scan again, because we cycle through. So active market, mechanically it's doing this. Visual inspection, great. Trade on, good. Manage the trade. So it's a very systematic approach to giving yourself peace of mind. And when the trades work, they take care of themselves. They really do. That when a stock's moving, it's moving. And you're only looking at the green ink on your blotter. It's going up, it's going the right way, it's fine. But when it's not working, like, it doesn't mean that your decisions were wrong or bad or incorrect, or it was a losing trade. It might just mean you've mistimed the trade. But don't worry about it. It's probably not mistimed. It's probably just not going to go this time. So hit the eject button. Don't worry about it. As we've proven, you're not missing anything. All you're doing is creating stress and anxiety for yourself if you just hold on and hope that it might work out. If it hits your exit criteria, hit exit. You know, too many people hold on and hope that it's going to work out. And the reality is, it won't. It rarely does. The one time that it does makes you do it, the next 10 times, the next 10 times, that decision will not work. It's not moving now for a reason. If you're looking for momentum type trades, momentum strategies, which is what I'm really focused on right now, then if it's not going in a specified time, again, that's part of the management rules. TTE, time out, target out, exit out. The first T is time. If it's not doing what I want it to do in the time that I expect, why am I in that trade? Why am I in that trade? So if you would like a little bit of help and this has resonated with you, what's holding you back? I offer help. If you want some help with the perfect trade, day trade or swing trade, and you want to learn the smartest possible way, then send me a message. You can send me an email at phil@antivestor.com. You can go to the website. If you need basic training, follow the basic training. If you need the day trade strategy, which is what we focused on today, similar principles with the swing trade strategy. If you need a little bit of help there, send me a message. I don't know if what I do is right for you until we have a chat. So with that said, that was Always Be in Business Tomorrow, more of a thought and thinking exercise. It's often or rarely ever talked about, but it's probably one of the most important things and lessons that you can learn for long-term success. Everything else is a learned skill. It truly is. Just like when you learned how to drive, you had to remember where the clutch was, the brake was, the accelerator, the indicators on the left, not the right, or the right and not the left. You've got to do everything in a certain order. It was complex. It was difficult to learn, but it's a learned skill. Trading's the same. There's lots of moving parts. There's indicators, there's levers, there's things to press in a certain order, but there's structure to it. And the long-term success is to not be scared of driving on the road. And that's what we focused on today. So when you've got rules defined that tell you what to do, when to do it, and why you're doing it, it's going to give you peace of mind. It's going to allow you to always be in business tomorrow and not worry about what you're missing today or if you've done the right thing or the wrong thing. Some of the worst trades I've had from a monetary point of view have been some of the profitable trades because I broke my strategy rules to place the trade. And it worked out from a monetary point of view, but from an anxiety point of view, from the blood pressure point of view, like they've been some of the worst emotional trades because I broke my rules to place it. And I always want to be in business tomorrow, whatever happens today. So we've looked at a few monetary losses. I'm about break even on the week. Just in the interest, it's a very small loss if I'm going to be honest. But peace of mind is what I've got right now because I've done everything I said I was going to do. With the benefit of hindsight, none of those trades followed through. Hoping that they're going to work out wouldn't have worked. I'm in business tomorrow. I'm not pissed off. I'm very relaxed and very calm. My ability to place the trade today is not impaired. And that's what I want to get across today. So with that said, we'll stop the slides there and we'll go and take a look at the charts and see what's going on with the markets.